trader here. You understand how the market works. You can read a single candlestick. You know exactly what you are trading, and you've been chosen the style that fits your life. In this lesson, we are not jumping ahead into advanced concepts. We are simply getting your gear right. A sensible brokerage account, the must know order types, a clean candles chart with volume, and a simple journal you can actually use. By the end, you will complete 3 practical tasks so this lesson translates directly into action. Before any team runs plays, they lace up, check the court, review the basics. Trading is the same. If your equipment is wrong or your court is cluttered, you will hesitate. Hesitation is how easy points slip away. Today, we will set up the essentials so you can step onto the floor with confidence. A brokerage account is a doorway between you and the market. It lets you place orders that route to the exchange, and it holds your cash in positions. Early on, your brokerage doesn't need to be fancy. It needs to be reliable, clear about fees, and easy place to place basic orders. If a platform confuses you at the order ticket, it will not suddenly get easier when money is on the line. There are different types of brokerages. Some are full-featured trading platforms. Others are investor-oriented with slower, simpler interfaces. Either can work for a beginner as long as you can place a market order and a limit order without thinking twice. If your brokerage includes paper or simulator mode, this is a bonus for safe practice. Cash versus margin, and why you should start with cash. When you open the account, you will choose cash or margin. Here's the cleanest way to think about it. Cash account, you trade only the money you actually have. If you deposit $1,000, that is your limit. When you buy and sell, cash settles, becomes available again. This naturally slows you down and keeps losses proportional to your real balance. For new traders, this is the safe lane. Order types. Every trade is a play call you send through your order ticket. At this stage, you need to master 4 simple concepts, so nothing about your order placement surprises you. Market order executes immediately at the best available price. It is fast and simple. In a low volume stock, the fill will be close to what you see. In a fast mover, you may be filled worse than expected because the price is changing quickly. Use this sparingly and intentionally. Limit order tells the broker only fill at this price or better. You control the entry or exit, but the trade might not fill if the price never reaches your limit. This is ideal when you know the price you want and you are willing to exit. Stop order is an instruction to trigger a market or limit order only if the price reaches a certain level. Even as a beginner, you should know that a stop market order becomes a market order at the trigger price, while a stop limit order is a limit order. We will go deeper on risk in lesson 7. For now, simply understand that stops exist and are commonly used to exit if the trade goes wrong. Time and force controls how long your order stays active. Day means it cancels at the end of the session if unfilled. GTC is good until canceled. Keeps it active beyond today until you cancel it. Beginners typically use day for intraday attempts and GTC when placing patient limits. A quick example, if you want to buy a stock currently at $25, you only want it if it dips. You place a limit buy at $24.80. If you are already in a trade and you would want to exit, the price falls to $24.40, you place a stop order sell at $24.40. So it will trigger an immediate exit if the price reaches that level. Charting basics. Your chart is where you see the game unfold. For now, keep it simple. Candlesticks for price and a single volume pane below. This is it. No overlays, no indicators, no extra lines. We will add layers in chapter 2. Choose any mainstream charting platform you like. Your broker's native charts are fine. TradingView is also a common choice. Create one watch list with just a few familiar names so you are not overwhelmed. Set your chart to a daily time frame for slower movement while you learn to observe. What volume is and why it matters at the basic level. Volume measures how many shares traded during that candle. Taller bars means more participation. Shorter bars mean fewer participation. You can think of volume as a crowd noise on big plays. The arena gets loud. Later we will discuss how volume combines with price to form signals. For now, simply notice whether important price moves happen on a higher than usual volume or on very quiet activity. This is where you're filled without adding complexity. Journaling your private film room. You will improve faster if you write down what you did and what you noticed. This is a simple notebook, notes app, or document. The medium does not matter. The habits does. Use complete sentences so future you understands what you did in the past and what you were thinking. I have a free linked journal template in the description. I want you to finish this lesson with reps, not just notes. Do these in paper/simulator mode if your platform supports it. If not, use the smallest possible share size. Assignment A. Open and configure the account. This takes up to about 15 minutes. Open a cash brokerage account if you do not already have one. Log in and locate the order ticket. Find where to choose market versus limit, where to set it in time force, day versus GTC, and where to place a stop order. You are not using a margin, you are learning the fundamentals with your own cash only. Assignment B, build the chart clean. This takes up to about 10 minutes. Open your charting platform, load a daily candlestick chart, and turn on the volume pane. Hide everything else. Add 2 to 3 familiar tickers to a small watch list. Take a screenshot of the chart so you can compare later when we add 2 layers in Chapter 2. Assignment C, place 2 practice orders, simulated if possible. Enter a market buy of a single share or simulated position. Then close it with a market sell so you can learn exactly how to route an immediate order. Enter a limit buy a little below the current price day. If it does not fill within a few minutes, cancel it on purpose so you can learn how to manage the unfilled orders. If your platform allows also place a stop market order, sell the attached to an open position just to see how the interface behaves. We are not building a risk plan yet. We are learning the mechanics. Finish by writing one journal entry using the template. Keep it to a few clear sentences. All right, so let's wrap this up right here. Today, you did not add any complexity, you removed it. You learned why a straightforward brokerage account matters, why beginners start with cash and avoid margin, how to place essential order types without confusion, how to set up a clean candlestick chart with volume so you actually see price, and how to journal in plain language so improvement compounds. In the next lesson, we will turn these tools into a simple daily routine you can repeat, the warm up, the lessons, and the review, so you can get consistent reps like an athlete in season. If this helped, subscribe and like this video and comment with one sentence from your journal today.